Thank you for coming, listening today. We're here because we've been talking for the last 8 months about the extraordinarily high gasoline prices in California. And this summer they were well over $1 more than the national average for gasoline. In fact, $1.50 more than the national average in Los Angeles. We've shown that Californians have paid more than $6 billion extra for their gasoline compared to U.S. motorists based on their consumption. And at really world record low crude oil prices, we're seeing California gasoline prices that are now starting to moderate a little. They're still 55 cents above the national average, but this summer and spring, these prices were $1, $1.50 more than the U.S. average, and that's outrageous. Californians have been getting gouged. We call it the Golden State Gouge, and today, when we look at the profit reports for these companies that are starting to come out in the next couple of days, we know why. Valero is the 4th largest refiner in California, and it has reported its profits today, and these are world record profits. The proof that Californians have been getting gouged is in the 3rd quarter profit reports of the 4th largest refiner in California, which actually breaks out profits per barrel and profits on its oil refining in California. And we know that Valero has never made more money making gasoline in California than it did in the 3rd quarter of 2015 during the summer months when we were paying too much for our gasoline. I mean, this is an astounding increase over last year's 3rd quarter. It's a 1,500% increase over the profits Valero made in the 3rd quarter last year. So we are looking at just an unprecedented profit that we think the other oil refiners are seeing. Valero and Tesoro is the 2nd largest refiner in the state, actually break out their California oil refining profits, and Tesoro reports tomorrow. Chevron reports its U.S. refining profits. It's the largest refiner in the state. This is going to be a world record profit season for these oil refiners, and it is high time that the legislature step in and the governors step in and ask the questions of these CEOs themselves. How can it be that by keeping California running on record low inventories, by running on empty, that oil refiners can make a lot more money on their gasoline? Oil refiners shouldn't be able to make so much money on their gasoline when their refineries break down. It'd be the only industry in America that do better when they don't make the product they're paid to make. That's artificial manipulation of price and product, and that's what's happening in California. And unfortunately, on the 2 opportunities for these oil refiners to testify before the Senate in March and before the California Energy Commission last month, the oil refiners refused to talk. It's time for subpoenas. It's time for the legislature to get serious, and the proof of that is in the profit reports. I'm going to turn this over to Cody Rosenfield, who's going to run down exactly what we learned today about how Valero made this money and how much they made. We know the way they made the money. We know the way Valero made this money was by taking a product that isn't as expensive as it used to be to make and charging what they used to charge for it. And the way to do that is by keeping inventories artificially low. That is a real crisis for this state and for the consumers who paid $6 billion extra for their gasoline, which comes out to about $300 per household more for their gasoline, and that money went right into Valero's profit. So Cody Rosenfield, the researcher who was watching these numbers today and on the profits report call from Valero, is going to talk about what he learned. Thanks.
Thank you, Jamie. I'm Cody Rosenfield. I'm a researcher here at ConsumerWatchdog. What I'm going to talk about is the profit report that came out this morning from Valero. And as you can tell here from this graph, these are Valero's California profits. And as you can tell, the last 2 quarters have been a huge deviation from the norm. Just this year, just this 3rd quarter, they made over $300 million. They made $342 million to be exact. That's over 14 times what they made in that quarter last year, which was just $24 million. They average only $50 million in California profit. So this is a huge profit increase, and the reason is obvious, and it's the huge prices we're paying for our gasoline in California. And if we'll go to the next slide here, I'm going to talk just very briefly about per barrel profits.
Next slide.
Valero also breaks out their California per barrel profits, and as you can see here, their per barrel profits are also exceedingly high, $13.50 per barrel of gasoline. That is a huge profit margin to be making on a barrel of gasoline. they usually only make $4 per barrel of gasoline, and that's with very healthy profit. So nowadays we're in a new time of unprecedented profits, both in the California region and per barrel in California. And if we'll switch to the next slide here, in the investor call this morning, Valero executives admitted that they're exporting 89,000 barrels of gasoline per day in this latest quarter. That's about 8 million barrels for the entire quarter. That is a lot of gasoline, and it's going mostly to Mexico and Latin America. And Californians have been wondering for months, why is any gasoline leaving both our state or our country if prices are so high and if there is an inventory problem? So this is, of course, more proof of the problem with our market, which is that companies are able to export product with no oversight and no public accountability. I'm going to turn it back over to Jamie Corton, the president.
So we're calling today on the legislature, the California Energy Commission, really the governor's office, to issue the subpoenas to get the answers to these questions. The profit reports are showing that Californians have paid far too much for their gasoline without good explanation for why. The raw material costs haven't changed. The only thing that's changed is that we've had inventories that since August of 2014 have been chronically low. And there's been a lot of deception in this market. And now we're seeing who made the money off of it. So we had a California Energy Commission meeting. The Petroleum Market Advisory Committee met a few weeks ago. We testified. We encourage people who want to understand not only why the oil refiners didn't show up, but what's happening in this market, to go to capitalwatchdog.org. It's with an O, capitalwatchdog.org with an O for capital, and take a look at both the video from that event or the blog that Cody and I posted from that event, explaining what we've learned about the market manipulation and the price manipulation. Our testimony before that committee really shows not just how refineries, an unprecedented amount of down refineries created the problem, but also how the oil refiners themselves manipulated the price at the pump by charging their branded stations where they control the price of gas at the pump far more than they charged a very small segment of the market, the unbranded independent market, which is the real price of gasoline. They pumped up these prices. And they did it through market manipulation, and it's time that the executives explain why and what they've done. So please go to capitalwatchdog.org with an O to learn more about that. Just pick California Energy Commission from the top of the screen, or search on energy and oil from the top of the screen, and you can learn more about the profit reports today at ConsumerWatchdog.org. Thank you.